Good morning, everyone. Happy Monday. Welcome to FOMC week. Here we are on Monday, and I'm going to start with the news. I'm going to continue with the S&P, add the DXY to our general fundamental analysis, and then we're going to look at ETH and BTC and map out our possible trades for this week. Be mindful that it is an FOMC week, so if you are like me in the situation where you're watching for a 4-hour entry, if you get one before the FOMC, happy days, secure it with a stop loss. If you don't get one before the FOMC, no rush, because generally the FOMC causes volatility and it will make a move in the opposite direction. Sometimes there are two fake moves. That's why it's best to wait. And if you're looking for a 4-hour trade entry, I would wait at least an hour and 30 minutes after the FOMC for the markets to absorb the information. Again, it depends on the time frame you're watching. If you're doing shorter time frame trades, like the 15 minutes, I would secure profits if you are in profit before the FOMC, rather than let the price action play out. We do have, I'm going to tell you from the very beginning, we do have some contradictory readings on the charts, and I'll show you the higher time frames and what I mean by the contradiction in the charts as we are right now in terms of momentum. The week looks relatively quiet from the point of view of the news that's going to come out. We have some Canadian news coming out on Tuesday, but nothing on the American part. We have the FOMC at 7 p.m., which is before the New York session finishes, and we all know that the session end and the session finish are where the market makers are gonna play their cards and their tricks. Now, we have again on Friday, it looks like a busy day. Services PMI, retail sale, services PMI, UK, GDP, USD, and not the Canadian dollar, but it's gonna be very volatile for the Japanese yen, the euro, the pound, the dollar. Take that in mind because the dollar impacts the coins. Now, lately we have seen some very irregular movements. I stopped saying suspicious. I changed it with irregular because it's not the way they normally move. So we've seen some irregular moves between the SPX, the DXY, and our coins, which to me signals market maker movement. Again, there's the market makers collecting liquidity in one individual market rather than a trend. So it is a liquidity-driven market rather than a trend-driven market, in my opinion, at the moment. So that's it. Big days Wednesday and Friday. The S&P has moved very technically, if you ask me, because this is the daily stochastic turn down. The daily chart is in this slightly upwards ascending channel, which generally has a tendency to break down. But of course, breaking down might just mean coming down to the 200 EMA on the daily, backtesting it, and then continuing, which might again be possible. And that would turn this into a sideways weekly accumulation, as is right now a daily accumulation. The stochastic is still down, and we are below the 20 MA on the daily, and below the 13 and the 5 EMA on the daily for the S&P. So again, support is holding for the daily, but it's looking a little bit fragile. Not as strong as it looked here, where it closed 2 days above the 20 and the 50 EMA. And again, not as strong as it looked here. So we're looking a little bit more fragile, and to me, this is looking like an intermediary, smaller time frame M formation for the bigger time frame head and shoulders. So that's what it's looking like to me. It's looking like a reversal structure. Again, could it be a consolidation structure? Yes, absolutely. We could see a rally. The markets are quite divided. I have been listening to commentators this weekend, people that have been in the market for a long, long time. And I was happy to see, happy, maybe not the right word. I was, it was reassuring for me to see that they are showing arguments and evidence both ways. So it could go both ways. That's why at the moment I'm taking the most technical options, the highest probability trade, and securing it with a stop loss. Risk management is essential no matter the stage of the market that you're in. Okay, now what do we have outside the S&P? We have the DXY for a background check. The DXY is going up, 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 up. We have the stochastic on the daily turned upward. So the S&P and the DXY seem to be realigning because we have 4 days to the upside. We had a drop on Friday on the S&P and then a lift on the DXY. So the DXY is continuing the upward, seems to be continuing the upward trend. It hasn't yet broken this previous high, which would, as you probably have heard me say, which would turn this into a big W or a triple bottom formation, however you want to look at it. This is the neckline. I've put a line here as the neckline of this potential triple bottom because it's like a descending neckline. The DXY is above it. It's holding all the necessary support, and it has the golden cross here. The 50 EMA has crossed the 200 EMA on the daily. That is a big indicator to me. There have been times when I completely ignore that, thinking, oh no, we're going to do the other way around. I'm going to be as technical as I can for now. I won't be ignoring that because more often than not, it does play out. So yes, the initial response to a golden cross or death cross is the opposite because it's a market clearing the orders that are in its direction, but it does play out eventually. Now, the weekly stock is up at the very top for the DXY. Now, could it do a retrace and continue? Yes, it could, like it did so here, and it was a similar situation up here. So it stays sideways, went down. So we could see that it's really high up. It's not when momentum is that high, there should come a retrace. However, the regular stock is not in the overbought yet, as it was in the situation. So the immediate momentum is high, but the regular RSI is not there yet. So we could see some some volatility in a sideways space, which is where I expect the coins to stay as well. I don't expect any big moves at the moment on either side because we are not showing indication of momentums aligning. I have seen over the past year, I looked at the way rallies break out and the exit or the next stage drop. If it is going to be a big move, it will have an alignment in the 4-hour, the daily, and the weekly. They will all reset to one particular edge, whether that is the high or the low side of the edge. We've yet to see. But at the moment, again, I find it quite I would be waiting. I am waiting in my ETH trades. I'm not going to place any position until I see a reset of the 4-hour in agreement with the daily. The weekly should be in agreement as well as an overall fundamental trend indicator. Not fundamental, fundamental in its original adjective meaning, basic. But the point I'm trying to make is, while momentums on the higher time frames and the smaller time frames are in contradiction, we are more likely not to have a particular macro trend. We could stay in this sideways, in this daily sideways for a while still. Not what you'd like to hear, but it is what it is. It's not what I want to hear either. I still have to say it because this is what I'm reading. Now, if we're looking at the 4-hour range that we have set for BTC on Friday, we've stuck right in it, the top part of it, which is generally a good sign for reversal. Now, the trade setup for today will be if we break, and I'm going to switch over to the daily because I'm going to take the daily MAs. There we go. As reference. So if we break above the 50 MA and we back test it, we're likely to continue to the top of the range, 32K. This is the first possible lift from where we are. Now, we haven't yet back tested the 20, which is the 26 level, and I was telling you yesterday in the chats that 26K would be a very reasonable level to test. Now, if we come down to the 26 and we break the previous low and we back test the daily, we are more likely to move down. So that this would be the other opposite direction of the breakout. I cannot make any particular projection as to breaking the previous low because we could be staying in this space for longer until September is done, maybe even October, and we're going to do a reset and then maybe pick finally a direction. However, as things are on the daily time frame, we're holding the 20 MA and EMA. The 10 is coming up. We haven't back tested it yet, but it's still holding. Support is holding. The next level of resistance is the 50. So here, when it meets the 50, I might actually redo this trade setup if I see rejection, and then that rejection would make the short more likely. But as things are at the moment, the long is more likely. However, it's still the middle of the range. It's still, if we're looking at this is a big M formation. You can think of it as a bigger spilling cup formation. I'm looking at it, and it could actually do a bigger retracement down. The retracement down will be confirmed when we break this 23.5, 22K, which is going to be a level of support and resistance on the daily. That's it. Lovely. That's it. These are the two possible trades for today. And again, they're nothing to write home about. So if you miss, for instance, the entry in one of them, you have not missed too much of the range because it's only 3%. These are supposed to be daily time frame trades, and they should yield a little bit more gains than just the 3%. So, but we have seen, I have been caught here in this V shape, and I didn't pay myself, which is a pity in my ETH trade. But again, I was trying not to be too fearful when it came to the profits, because 5% is not a 4-hour profit. So it is what it is at the moment. We have to be patient, and we have to wait for more liquidity to come into this particular market if we are to be longing for bigger gains. If the overall climate turns negative, then we are likely to see a drop, a retracement, as we have seen for the S&P. Like, that's what I was telling you about, because the S&P actually on Friday, this was Friday's candle, on Friday it retraced back to base, lost all the gains made in the previous 3 days. Our coins didn't. So again, it's quite irregular. To me, this looks like the last liquidity collection before a bigger drop. So who wants to sell at the high, convince everybody that it's going to go up, the market makers who wants to buy at the high, convinced that everybody's gonna, convinced that everything's gonna go up. Retail. So I would be quite cautious here. Of course, I told you on Friday, breakout trades with tight stop losses above the previous high. If you're, as long as you're managing your risk, as long as I'm managing my risk, I'm okay with placing, covering both sides, placing a breakout to the other side. We might, again, I believe that this is not lift momentum. I believe that this is pump and dump scenario. However, smaller trades, when it breaks the previous low or when it breaks the previous high, are, in my opinion, a very risk-controlled way to be trading this. Take your profits. Do not wait for the bigger fish. If you see that it's reversing, secure at least 50% of your profits before it retraces. Now, where are we now? Let's go to ETH. ETH is, oh, by the way, sorry, I didn't want to move so quickly because I've done the daily and I want to do the weekly as well. I want to do the weekly for BTC so that I show you what I mean by contradictory information for BTC. I'm going to be using the Trader's Reality indicator. Okay. The weekly is as much as we are below the 50 EMA and we're not holding particular support on the weekly and we closed below the 5 EMA even, the weekly stochastic has turned up. Yes, money has started flowing out of the weekly chart time frame, but we do have the stochastic turned up, ready to cross to the upside. Of course, I would be giving it another week. The FOMC week is supposed to be very, very volatile, so I would be giving it another week to see if we can confirm above the 50 EMA and continue upwards. If we can't, then we're likely to have this turned into an M formation. To me, this looks clearly as an M formation. However, if I'm looking at the steps on the weekly, if this is my W formation, push away level 1, push away level 2, push away, this is it. I have W, 2 A's, and here M, push away level 1, push away level 2. So that would be the structure for my weekly descent down back to base. However, we need to break previous lows to confirm this scenario. Still, contradiction is the stochastic, the immediate momentum. On the daily, we have the opposite. On the daily, we have the daily momentum that is up at the top and looks overextended in the overbought. So with this momentum right up here, we still have a little bit of I still have a little bit left till the 100 mark, but it's quite up high, and we seem to have done our lift. There is no money coming out yet from the daily chart. We had money coming in this consolidation. So we are below the 200, we are below the 50 EMA on the daily, and we seem to be avoiding at the moment a death cross. The 50 EMA hasn't yet come down over the 200 EMA for BTC on the daily. However, I don't think this is gonna be lasting too long, and I think this is gonna happen. Could this be the initial pump before the dump? Absolutely. Again, I don't want to be bearish, and I don't want to present any particular kind of bias besides what the charts are showing. Again, if I'm to look at this, I would say that this is unavoidable. We still need a couple of days for this to show itself. Okay, now let's have a look at I'm going to start with ETH in the same manner. Where's my ETH? EMAs, perfect. So I'm going to start with the weekly on Trader's Reality because it's much better to zoom out. When in doubt, zoom out. The weekly for ETH is in the same way, so it's reached the bottom and now it's looking to turn up. It hasn't yet, and of course you have heard me say plenty of times, as long as we're not back into the normal range, things are not going to catch a direction. We are very close to the 200 EMA on the weekly. We haven't touched it. We've tried to twice. We didn't do it. It looks like we will, in my opinion, but the price action didn't reach there. There is no money coming out on the weekly time frame in my money flow indicator. Also, what did I want to tell you? Yeah, there's plenty of bullish divergences on the weekly. I'm gonna change to the daily. On the daily, we have the opposite. We have the daily that has reached the top, but again, no bearish divergence, nothing to be mindful of in terms of coming down with price action. And we can see here on the wave trend, we can see that differences in buying are slightly higher than selling. Now, I'm gonna remove this. So that's the contradictory weekly to daily time frame momentum. Now on the daily for ETH, we do have the death cross. The 50 has crossed down over the 200 EMA. So at the moment, with that happening, we've had the lift, a mini drop, and now we've had another lift. Again, I tend to believe that was the pump before the dump, but we need to see the previous low get broken until we break the 1466, which is not coincidentally the 200 EMA on the weekly. We're not going to go anywhere. We are consolidating, and we're consolidating for a lift if we are to choose a direction. Now, on the daily, I'm going to map out the possible trading scenario. On the daily, I'm going to take the 20 EMA as reference because ETH is one step behind. So we break it, we move on. There we go. We break the 20 EMA, we move on, we back test it, and I'm going to let this go through the 50 because we're likely to break the 50 when we do get out of this, because we've been in this consolidation for weeks now, longer than 2 weeks. Now we could also, at the moment, we have done a back test of the 20 and it looks like we want to come down again and do a back test of this. This would be a daily trend line. It's super, this is the bull market trend line. There it is. To my mind, it looks like the swings here could be done, but we can also have, depending on how protracted this bear market is, another touch to the top here, the 2100 area. There we go. Before a possible breakout to the upside or to the downside. So again, I am not the only one to read contradictory information. I do believe that what we're seeing on the daily and the weekly charts is contradictory. We are holding support on the daily, and also some support on the weekly. We're still in the same range. We haven't changed the range, so as long as we don't leave this range with a clear candle like so, we're not going to go anywhere. So we need to see some movement. I'm going to be posting these trade setups in the chats. Do let me know what your setups are if you're looking to trade smaller time frames and just keep an eye on the charts, or on the contrary, if you're looking for a higher time frame entry. At the moment, I will be waiting. If I don't see any of these longer time frames on the daily, the 50 or the 200 being hit, I won't be looking for a short position. And if I do see the previous lows get broken, I will be looking for a short position. But I'm holding my entry, I'm holding my capital for the moment, because it is the worst kind of position, the worst kind of time to be putting in a position right now, because it's not going really anywhere. And we do have the FOMC on Wednesday. What I'm saying is patience will be very a good strategy here. Of course, if you have a position right at the top of this swing or right at the top of this swing, again, the profit is not huge. From wick to wick, it's 12% on the daily, which is a small frame, which is a small range for a coin, and half of it, as you can see, is retraced in the first initial candle. So very tricky, not necessarily tricky, is not very challenging. Taking profits, taking more conservative profits here, I think would be the better strategy, in, you know, being very humble and just taking the 20-30% when they are presented to you, even if you're trading on the 4-hour, is good. Anyways, no more waffling, because I am waffling by now. This is it. Do let me know if you have any questions in the chat, and I do wish you a nice week.